Hello, everybody, and welcome to the Trading with Ashley show. Wow, a day like today is sometimes more nerve-wracking than if you're losing money. And what I mean is very, very fortunate that today alone in my combined portfolios, I have been able to make over $100,000 in one day. And that is not to brag. That is to definitely encourage those of you who may be wondering about trading. Is there a safer way to trade, especially if you're dealing with a sizable portfolio? Is there a way to take control of your finances and do this yourself? And I am here to tell you that there is. I make the majority of my money through trading the wheel strategy, and it is so extremely lucrative, especially in a bull market. Now, in a down market, it can be scary to put your money at work, but when you're trading the wheel strategy, which is a combination of selling puts and then once you're assigned to selling calls, you can trade in a safer situation. Because if you are selling puts, let me explain what that means first for those of you that aren't as familiar with the terminology. That means you are putting up the money to buy a stock at a price you're comfortable with. So first of all, in that scenario, you have to want the stock. That is rule number one. If you don't want the stock, then we should not be even looking at the stock. But if you want the stock and you plan to hold the stock in your portfolio for a little bit of time, then you would want to sell a put on it. Now, price entry is everything, and I've been able to achieve the results I am seeing because I have great price entry on a stock. And I don't just guess at it. I actually have guardrails that I use to choose the right price entry. And so what I'm going to do for you here shortly is take you through what I look for when I am selling a put. What are the guardrails? How do I decide if it's the right time to get in? So I think this will help grow your confidence to actually try your hand at trading by using lower price stocks that you want. And you can start using this strategy to try to establish a position. The best part about the wheel strategy is after you actually are assigned the shares, let's say you get the shares, then all you have to do is wait. Wait for usually a couple of days, maybe a week or so. If you get the right price entry, it doesn't take long. Then you turn around and you start selling calls against the shares. Then when your shares are called away, that's forced profit. So in that scenario, you have made money 3 times. 1, you made money selling the put, you got premium. 2, you made money after you got the shares selling the call to have it plucked away. And 3, you made money on the price appreciation. And what growth I saw in my portfolio today, the primary growth that I am seeing is because I was put shares and today they took off. Now the S&P is hitting all-time highs. But I took full advantage of that and I started selling calls on a lot of my positions. In fact, me and my community members, we made tons of premium today selling calls. And all of the positions we sold calls on, they're in profit. So if they get called away, then it's forced profit and then we cash up for the next opportunity to sell puts. It's truly a wheel. That's why they call it the wheel strategy. And it is a life hack for many, and it's just too good not to share. When I first started doing this for a living, I could not wait to tell everybody, friends and family and everybody about this. And the reason I'm on YouTube today is I actually started I didn't trade my daughter's friends. I started training my daughter's friends. The younger generation is a lot more open to things like selling options. So I trained them and they started making money. And they said that it was so easy to learn it the way I trained them. So then I said, well, let me take this to the masses. And that's why I'm here with you today. And I must say, I'm so fortunate because so many of my community members are making such great life-changing money as a result of learning this skill. I want all of you to consider learning how to do this. If you know nothing, if you've never traded a day in your life, you can learn this. Everybody starts somewhere. Now, don't go jumping in with tons of money if you don't know what you're doing. if you are interested in learning, I am hosting a boot camp. Because of the demand, I've had to open up a third boot camp, which is very exciting. But it will be the last one we host for this year because we'll be getting into the holidays and everything, and it's just too crazy to try to pull together a group of people to train them. So if you're interested in a boot camp, then I want you to click that link below. But right now, we are going to go into the charts, and I'm going to show you the best entry for selling a put. And then I am going to show you a couple of my positions that have been so incredibly strong this last couple of weeks and what has helped me to achieve the kind of results I'm seeing. The first stock we're going to look at is ticker symbol AAPL. It's Apple. And the reason I want to look at Apple is it is a great example of a stock I would want to own that was just having a red day. So the first box is checked. Do I want to own the stock? Yes. The second box is checked. Is the stock having a red day? Yes. So those two things combined allow me to move forward with the potential for selling a put. Now, because Apple is trading at about $227, I would want to look at the band and look at the Bollinger Band specifically. It is going to give you a clue as to the potential price movement of the stock. Now, if I look at the band, you can see right here, I'm going to try to zoom in. The gray area is the Bollinger Band, and you can see on the 3-month chart, and the reason I'm using the 3-month chart is because I am going to be selling a monthly option. So if you want to look at potential price action, it's safe to assume that Apple will trade between 217 and 233. These are the guardrails in which I am going to operate in. However, there is levels of support between the bottom and the top that you can look at when you are trying to make a decision. So if Apple is above 50 on the RSI, and it looks like it is, it's right here at 53, then Apple is considered to be in a bullish state. When that is the case, you've got a few options. If you want to be super conservative with the strike price that you're agreeing to buy Apple at, then you would want to shoot for the bottom of the band right here. That would be around 218. However, if you notice as you go up here, there's a couple of different lines right here. I'm going to describe them to you. This black line right here, that is the 20-day moving average, and it sits at about 225. That serves as a good level of support for a stock if it bounces off of this and then goes up. If that was the case, then a fair price might be to get Apple at 225. But if you want to be a little bit more conservative, we will go down to 223. It's this purple line right here. This is the 50-day moving average, and it's an even stronger line of support than the 20-day moving average. So you could select the price of about 223.50. So you have 3 different potential price points. You've got 218, 223.50, and you have 225. So let's go look on an option chain, and then we will decide on what one we are deciding to trade based on the funds we have available to us, coupled with the delta. Once you get to the option chain, it's important to note that puts are to the right and calls are to the left. And this is the case regardless of what option chain you are looking at. And the next thing you need to consider is, where do I go for my expiration date? So if you look right here, I have selected 11/15/2024. Now the reason I selected this particular date is I am selling a monthly option, and if you go to the 3rd Friday of any given month, you get a lot of visibility to what the institutions are doing with their various trades. They do their options on the 3rd Friday of every month. So I like to go there because there's more volume on the chain, and I can see where everyone has stacked up there, placing all of their different trades. So once you get on the chain, now let's go down to look at the various strike prices we had talked about. We had discussed 218, and it looks like they don't have 218, so I've got 215. That would be a really conservative entry for Apple based on those Bollinger Bands. If I were to sell this one, I would need enough cash for 100 shares. So that would be $21,500. I'd put this up in my broker, and if I sold this put, then I would receive $2.80 a share. So that's $280, which is not bad. That's a really good return on a monthly basis if you're considering what you would typically make if you just put your money into the market and let it appreciate. Typically, that's anywhere from 8 to 12% a year. So a return like this on a monthly basis is very attractive. But let's go look at those other entry levels in case we really want to get this stock and we're okay going a little bit higher. 223 was the other level of support. Well, looks like they don't have that either, but they do have 220. So if you just go up $5, you will receive $4.15 a share. So this is $415 for putting up $22,000. Now, if you wanted to be a little bit riskier, you could go ahead and look right here at 225. We're sitting almost on that right now. For this, you would receive $580 for putting up $22,500. Now, I like to make my decision. I like to look at these deltas. So looking right here at the 215, the delta is 0.23. So that's about a 23% chance that it will end up at $215 a share and that I'll get the shares. Looking at the 220, that's about a 31% chance. Looking at 225, we're at about 41% chance. Now notice as your chances to get the shares put to you rises, so does the premium. So this kind of gives you a better idea. And a good rule of thumb that I like to use, if I really want the shares and it's a really good trade setup, I'm comfortable with around 0.3 delta. But if I'm more interested in premium, but I would be okay with the shares, then I try to go for a 0.2 delta. And so this is how it would work. If you had settled in, let's say on this 215, then you want to sell right here. And then when you send it to a ticket, I'm going to show you what it looks like. Once you get to the ticket, you're dealing with an option. Here's your ticker symbol, expiration date. This is the strike price. You're selling a put, sell to open. Now here, when you put the quantity in, for every 100 shares, you want to put 1. So that's how they sell them in shares of 100. Now, when you get to here, I like to go ahead and do a limit order, and I will watch price movement throughout the day, and I will try to put a limit order in that's going to give me the best possible entry. So you can see here the bid and the ask. The bid was $279, the ask was $284. So based on seeing this, the middle of that would be around, $282, something like that. So I'm going to go ahead and I'm going to put the higher level in here and just see if we can get a fill at some point throughout the day. And what this will do for you is once you put this in, you would consider doing this just for the day. I typically don't do these good till canceled. I do them for the day. And what would happen in this situation is you would sell this. It would reserve the cash for you to buy these shares. So that is $21,500. Your broker would hold out the cash in case you put the shares. That would be $21,500. But you're going to see this $284 go into your brokerage account right away. And this is yours to keep. You only have to give this up or portion of it up if you get out of the trade early. But if we get to our date and Apple settles in above our strike price, then we keep 100% of the premium we received and then the funds are released to us. However, if Apple does settle in at or below 215, then you get put the shares. Well, what if you get put those shares, let's say at 200, and then you're sitting on a $15 loss at that point because you bought them for $215 and they're really trading at $200. Well, if that's the case, then you have to be patient because you definitely want Apple to rise back up to your entry price before you consider selling it or you start selling covered calls on it. Now, I'm going to take you into a lot of my plays and I'm going to show you all the different premiums I've received. Plus, you're going to see a lot of stocks that have had price appreciation because I sold puts, I was put the shares, and then the stock rose. I wanted to show you some of my plays so that you can get a sense for how this works. So if you look up here, this is Palantir. Now, I had acquired these shares quite a bit of time ago, and I had been selling puts for quite some time. So I amassed up to 5,000 shares. Now that those shares are running and they're well above my cost basis, I have started selling covered calls on them. So you can see right here, this is 50 covered calls to cover those 5,000 shares, and my strike price is $50. And so right now, this trade is a winning trade because Palantir has retreated from the time that I sold the put. And today alone, I made $950. And so you can see what a powerful tool this is. Here we are a month from now, and I stand to gain another $6,900 if Palantir does not end the day on 11/15 at $50 or higher. So you can make money not just through stock appreciation, but if you sell a call and a stock retreats, then you'll make good money that way. Now, I wanted to come down here and show you my Palantir position. So here's the Palantir position. I've already made a 57% return on my positions alone. So it's right here at $79,000 in profit. And you see a little bit of a pullback today, but when you see that it has a pullback, the sold call is actually something that profits. So I am making money in all different directions with Palantir because I have the covered call on my shares. And that is how you can really supercharge this strategy, is to be put the shares, let those shares rise, and start selling covered calls. Now, let's look at another position. This one may interest you if you don't have a lot of cash to work with. SoFi is a great stock to sell puts on, and it was riding up today. So this was a position I had actually taken out probably a few weeks ago. I had sold the put at the $7 strike. It was a red day for SoFi. It expires in November. I did 10 contracts. And as you can see right here, these are already 54% in profit. And the reason they're in profit is SoFi is rising, getting further away from my strike price. And so if these expire on 11/15/24, then I will receive all the premium. I'll get to keep all the premium that I received. So it would be this $138 plus another $115. And so this is great because once this expires, it releases all of the cash that's holding this trade, and then I can do a different play. And then you can see right here, this one was a play that I did a while back. I sold a put on C3AI, and my strike price was $22.50. It does not expire till the end of the year. I'm dealing with 5 contracts, and I've already made $804 on this contract because it's getting further away from the price that I sold it at. And I still have another $522 left in this trade. And the worst case scenario, it retreats, I get put the shares, but then I'll do what I've done with Palantir. I'll wait for it to rise and I'll start selling covered calls on it. Here's a good example of how I played Palantir both ways. On a green day, I sold those covered calls, but on a red day, I went ahead and sold some $35 puts expiring 11/15, and those are in profit as well. I've gotten $614 on this trade alone with another $300 to go. So you can see how over time and time again, how this would be very lucrative because you're stacking all of this money, and then if you get the shares, then you're getting to ride the money train up and then eventually have the shares called away. Okay, everybody, I hope you found that helpful. I hope you're gearing up for a great, restful weekend. And I want you to know that I'm here for you. I feel very fortunate to be in a position to be able to have a channel and teach so many of you how to do this. Remember, if you want to be a part of my community and do this with us all week long, then consider joining my Discord. Now, if you've never traded with the community and you've always gone at it alone, it's not near as fun. We were up late last night communicating about the Tesla event and just making jokes and having fun and strategizing on how we are going to make our plays. Being a part of a community really puts you in the right frame of mind to be the most profitable trader you can be. And plus, it's just fun to be with other like-minded people. So if that's something that interests you, we would love to welcome you with open arms into our community. Remember, once you are with me, Trading with Ashley, there is no trader left behind.